Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's keep going with our analysis on euro currency. From a technical point of view, we do not have any surprises. So market is gradually moving lower, coming closer to the bottom. This 108 area. Actually, from the long-term analysis, this 108, 109 might have a special meaning, at least from the sentiment point of view, because you know, euro pivot support 1 stands around 109. And from the sentimental analysis, and pivot framework, the breakout of the pivot support 1, especially euro pivot support 1, it suggests starting, at least it confirms that the current action that we have is not a retracement anymore, and this is the new part of the long-term trend. Since we see the breakout of the support, it means that this trend is bearish, and market stands very close to this moment. As we have not really a lot of surprise on the technical side, on the fundamental side, there's a lot of things to talk about, which we have done in today's weekly report. In particular speaking, we have taken a look at a few indicators that are not really widely performed in the news. So everybody is fascinating with our hawkish policy from the Fed, good unemployment, good payrolls, high inflation, but there's few who pay attention to such indicators as the rate of the mortgage loans, the orders for appliance for new mortgages, and demand for the consumer credit. How it describes the current situation and why it indicates about the problems in the economy that by our suggestion should become evident closer to the end of the year. You could read it in a report, as usual. So, once we have mentioned last week also the student loans, that currently already households feeling the rising burden of the debt servicing with the rising of the mortgage rates. The rates on the student loans are rising as well. And as you know, Joe Biden signed the acts that suggest the postponing of the payments for 2 months as well, because it seems that there is also rising big problems of the insolvency. And while the households were supported by different stimulus from the government, especially in the COVID moment, so COVID era, currently these supportive measures are withdrawing gradually, and that leads to contraction on the consumption power of the households, and the rising and necessity of the servicing of the debt, loan debt, mortgage debt becomes currently a really big challenge for many families. So all the stuff we have discussed, and it also explains why we think that in the current circumstances, the rising of the interest rates in the United States hardly will help to improve the situation. Because when the economy working at minus, and you have the negative real gross domestic product, rising on the interest rates makes the second impact on the economy, making money even more expensive. So with the more expensive money, it's very difficult to generate the income. And this is even more reasonable for euro currency and for European Union, where economy stands near of the actual nosedive. This could be ruined very soon, within a few months probably. And anticipation of that the European Union starts rising rates for 0.5% close to the end of the year. Well, we think that in the current situation, hardly possible that this will happen. Anyway, we'll see. So all the subjects we have talked about in the weekly report. From the technical point of view, guys, what we could say that based on the performance, as market is showing the pullback from the long-term support. If you remember on the monthly chart, this is trend line. This is yearly pivot, as I said. Now it's turning back. Usually, when the market is turning back, returning back to the support, This is it suggests a big probability that market intends to break it or challenge the support, trying to move lower. Our suggestion is that hardly euro stop just around the lows, showing some wash and rinse or something of that sort. It is more probable that we could get the direct breakout. If even here, market could show the pullback. In fact, the breakout could take shape in two different ways. First, it might be direct breakout, or I not exclude the chance that it might be kind of the butterfly. So here we could get minor pullback, and then major swing down could start. And since on Friday we have discussed this minor slowdown of the downward action, so take a look on the 4-hour time frame chart. We have slowed down of the action. This moving average would not need anymore by far. Here we have also some multiple grabbers right on the bottom, which are not really very reliable, but at least it just indicates that market is slowing down. And this makes us to keep an eye next week on the pattern that we have discussed on Friday as well. This is head and shoulders. Currently, with the minor downward continuation on Friday, you could see that market precisely hits 1618 extension on the most recent swing. So you could calculate from here, or you could just draw it right there. It's not really very big changes, although by these calculations, market hasn't quite reached it. Anyway, it's very close to 1618 extension, which is very typical for the hand shoulders pattern. So having this divergence here, divergence on the 4 time frame chart also is rising. We think that the chances on the pullback, especially keeping in mind the possible butterfly here that might be formed, right? It seems that the chances still exist. And hopefully, if we will get this pullback, it will be a great chance to consider short entry around 109.70 area, because here might be the target of the hand shoulders, and also it will be confidence resistance. So it makes perfect combination for a short entry around this area. We do not intend to trade this pattern on the long side, so taking long positions, just because our context is bearish and we're mostly interested with the chances to go short. But it's of course not forbidden. If you trade on the hourly chart and lower time frame, you also could consider chances and setups for taking the long position as well. Just control the risk. So that in general what we intend to keep an eye on next week, and it might be a really interesting journey with this pattern on the hourly chart.